Hey, what's up, everybody? Today is May 12th, Friday. We're continuing on with episode 6 of Finding Your Way. LasagnaCat's been perfecting his setup, going through his trades, practicing his mindset, um, and honing in on using both setups. When he doesn't see the fib setup that he uses, he'll jump to the moving average setup, and he's gonna explain how they both kind of complement each other, especially if um if price action moves out of range of a fib, you might be able to transfer to the moving average play, and vice versa. So take it away, Lasagna Cat.
Hey there. Hope everyone's doing well. Happy Friday. Um, yeah, so I did some trading this week. I took 7 trades. So what I found this week was that my win rate is still not quite as high as I want it to be. It's not where I want it to be just yet. And was out of 7 trades, I had 3 reds this week. And so my win rate is just about 60% for this week. And I drilled down on what some of the problems were, and I've created some new rules to help me with those next week. And so I feel optimistic about how the new rules are going to help me out. And that's an important part of this process because, like, progress isn't, a straight line. It dips and stuff. And you have to rethink and retool and, make little alterations to what you're doing. Like, success is largely about course correction. And so I'll be course correcting along the way, keep myself on track. Um, so yeah, as Semper mentioned, I've got 2 setups that I'm playing, a lower high setup and a what do you call it? A fib setup rather, and then a moving average setup, and that they complement each other. So I'm going to show you both of those setups now. I have 2 like sort of ideal screenshots. This is one from like I think last month. This is kind of the one that I'm like using as the example of the fib setup. So this isn't one from this week. I'm just showing you guys like kind of what the mission is. So this is it. Like it's based on a higher low, entering on the second higher low, RSI overcool, MACD cross. Volume, hopefully that helps. This one in this example doesn't really have it. And so yeah, this is the ideal, and you get in on a second higher low in your fib range after drawing a fib from the top, preferably a red pullback down to the bottom. So that's that one where the fib works out. And the other one that Semper alluded to was the moving average setup for when the price action moves beyond your fib zone. And this is a really good example of that. This is a trade that I did not take. This is uh price action that I identified and made a screenshot of just to base this type of play off of. So what this is, as you can see, it's a lower high setup, but it didn't give me, based on a fib on this red pullback here, but it didn't give me a series of higher lows. It gave me one higher low here, probably a very, very great um entry for those who would play the first higher low. And honestly, I tried some first higher low this week and it did not work for me. Last week, I said that I might give those a shot. And I have had successful ones, and I have a successful one or two from this week. But in general, I find them difficult to play. So I'm going back to just trading the second higher low entry. But getting back to this, so on this one, it did not give me an entry in my fib ad zone, which is this little grayed out section here. But what it did do is that it blasted up past, and this right here, price action leaving my fib ad zone, uh, went up past, hit its head on the 100, and came down to pull back to the 50 SMA. This is the entry here. This is the ideal entry. And you see it hits both fib targets. You still use your fib targets, but this is the playable entry for when it leaves your fib zone and like you're waiting maybe for that second pullback for the entry. All right, so that's the mission, and that's a little bit of a illustration behind what Semper was talking about. And now I'll get to my trades this week. The first one, so on Monday, I had a red and a green. My first trade was the red. I'll show you that one. and it's a bonehead kind of a trade, one that I've made many times before, but it gave me a new rule for my system and my setup, and it also showed me a great, really great signal for getting out of a trade. Um, so with this here, I forget what the support was on SPY, but this yellow line here is the 666 SMA. And so I mentioned that I no longer want to do plays off the first pullback. And here's why. Um, there are a bunch of reasons why this trade didn't work out, but this is the one I'm going to drill into right now. So, I drew a fib zone based on this red top to this bottom. I saw that uh, the MACD was making a cross. I didn't have a good RSI look. The reason why I was kind of seduced in this trade is that I saw that there was a higher low seeming to catch the 666 SMA. And when I saw that matched up with a MACD cross, I kind of threw everything out of the window and just went for it. VWAP matched up with the 666. I don't know. At the time, I thought it was a good idea. The other place where I screwed up is I use RSI either recovering from overcooled um, as like one of the first catalysts, or a pullback to the 50 um, midline on RSI for an entry. So I got in here. It was a lame attempt, and I got stopped out. Under the 23. I took my stop 23 fib. Um, so this loss kind of solidified the fact that I need to use the second higher low as my entry, which if I had waited, I would have seen that there was none. Also, this wasn't a very significant dump, and my setup is dependent on there being a significant dump, although there probably was a more significant dump during pre-market. One thing that I really want to point out, and I pointed this out in the chat earlier, is that I noticed that lower highs underneath RSI's 50 midline are a great signal that like a setup is not working out. At least the setups I tried to play. Because you see, we have this high under the 50 and the lower high, and then the third lower high. And it goes for the cross really quickly. Now, this third lower high happened on this green candle. And look where I made my entry. I mean, that's crazy. Like looking at RSI, that invalidates my whole entry. But again, I got tunnel visioned on the 666 moving average coupled with the VWAP. So it was tunnel vision. It was my first trade of the week. I was probably feeling antsy after a weekend of no trading. But I'm incorporating this RSI look into one of my rules. So one of my new rules is if I see two lower highs under RSI, I am out, because there's some other examples from this week that I have of that, and it seems to be pretty dependable. So this is a trade that I'm not proud of. This is a trade that makes me, to a degree, question my progress, from the last few weeks. But I know that that's just me being hard on myself. This resulted in some solidification of new rules, as well as discovering a great new signal for getting out, which is the lower highs under RSI. And so the goal is to not do this. And again, I showed great progress in some of my wins this week, and so it's all good. But this is a no-no. So that's pretty much all I have to say about that one. Also, the moving averages were stacked completely bearishly and all that. It was a tunnel vision type of an error, is what this all was.
No, no worries, LasagnaCat. As long as you're starting to what you're starting to see, once you start to understand how RSI really works, you're gonna be laser. So I'm glad that you're still learning the RSI and you're bringing up great points and examples of the RSI. Um, so you're getting used to it. You're getting better. Because I don't, like I said, I've kind of sped up my learning curve with the RSI by watching other videos or paying attention close to how Brandon describes price action according to RSI.
Yeah.
So, like you said, that's a great point that you saw the lower lows or the lower highs creating off the 50 and it shied it. As of
Yeah.
late, when it shies it, so throw that into your rule book. If it shies it and it starts creating lower highs, it's most
Yeah.
likely gonna go out.
Yeah.
In order for this to be a valid play, or to use it as confirmation for you to for a trend reversal right here for it to go up,
Hmm.
you would have wanted to see RSI smash through the 50 and then do this lower high right here on top of it and hold it.
Yeah. And so it's particularly a smash through, not just a poke through, right?
Yeah, yeah,
Yeah. Yeah,
yeah.
it makes sense. And I'm glad you mentioned about the lower highs because like after noticing this on Monday, it started jumping out at me all over the week,
Yep.
you know.
And that's it. And that same thing goes for when it's in overheat and overcooled. Look for that. Look for that because as you can see, price action was going up right here, but it
Hmm.
was creating lower highs.
Yeah.
And you'll see it more like my eyes pick it up better when it's down here in the overheat or the overcool, it'll pick it up.
Yeah.
Like it when price action hits a base, right? And it creates another a lower low
Hmm.
and RSI is still making a lower high or higher low. I mean,
Yeah.
start looking for that because it's
Yeah.
most likely going to be a bounce.
Yeah.
Especially, especially the reason why I like it on the overheat and overcool is because it'll go into the overcool and then it'll sometimes it'll bounce big up here and
Hmm.
come back down and create another lower high
Yeah.
or higher low. I mean, and then it'll go another time and then sometimes a second time, and that's when you get this chop. That happens when it's been beaten down a lot. It'll
Hmm.
confirm twice down here at the bottom and then it'll go up to at
Yeah.
least the 50.
So you mean on RSI it'll create sort of like a double bottom thing and then go up?
Yeah, but it still has to be higher than the overheat, then higher than this
Right.
point over here.
Yeah. Yeah, absolutely.
Ideally you would want it to create another
Yeah.
higher low
Um,
instead of like a double bottom.
yeah. Well, which is awesome because like this is actually my next trade. That's my second trade of the day. And like I did pick up on the higher lows. It's funny because like once it recovers overheat, I think in the past and even still today, like it's difficult to know when the confirming price action is, but
Hmm.
like or rather to wait for it. But it's like picking up those moments where it's going to bounce off of the moving average, and
Yep.
bounce off the moving average. Like over here where it's not really bouncing off it or anything, it's just sort of like weaving in and out of it, like back down here.
Yep.
Um,
But as you can see, look at when that line goes in and out of it,
yeah,
price action goes above the 9 or above this moving average,
right.
and it goes below it. But
Yeah,
over here, it stays below it the whole time.
yes, yeah,
And then the line is smooth. The
yeah,
line is smoother over here. So it'll tell even like right here, like the way that you want to see it right here, right? The way that you want to see price action is when it comes down to the average line, you want to see it bounce. And then you
right,
want to see it bounce and mount that moving average. So if it's above this moving average right here, you
yeah,
want to see it come back and bounce right there. You want to see it bounce off of there.
right, yeah, yeah, for sure. Or just like identify like a good higher low in the fib zone because that's what
Yep.
I did in my next trade.
Yep. Exactly.
Cool. Should we move on to that one?
Yeah, go for it.
All right, excellent. Because yeah, like after this, it's funny about when I take a trade like early in the day and this happens, it's like it wakes me up to the fact that I need to be more discerning. Now, I'd like to be able to have that without doing the trade that doesn't work out.
Hmm.
But there's plenty of examples of that. All right, so here's the one that we were just alluding to. Um, so again, this is like where I had that trading thesis that didn't work out, but here's the one that did work out. And it's a lot of stuff that we just went over in commenting about the last one. This one had really well defined support, 522 doji level. It's one we've used before, I think, many times. Um, This fib was actually based off of a green pullback, this tippy top green. It would have worked really well with the red as well. It's just that this is when I happened to like notice it, and so I went with that. But it would have worked just as good with the red pullback, possibly an even better ad zone. But I like how I did my entry here. But yeah, at any rate, drew the fib, got the first lower high, sorry, first higher low. And again, after this week, I'm only going to do second higher low entries, until I know how to discern when a first higher low entry is good, and that will take some time. Um, but I got my first higher low, and I'd already noticed RSI down here was recovering overcool, first higher low to match with the higher low in price action. I saw MACD come up here. I thought I was going to go for the cross there, and then when it came down, I was like, "Oh, what's going on?" But then it quickly started closing back in again. So I was like, all right, this looks good enough to me. And so I really like seeing it come down again into here. Like that really is, this is a little bit weird looking because it's a little blocky. But I like the progression. So when I saw it coming here, I didn't buy in the first candle that it went in, but I did here on the green. And what I like about this is I had a lower entry than before previous trades, and I want to get my entries lower. I don't want to do the 661 anymore. I want to do between the 38 and the 50, or at least the 50, because I have plenty trades where I end up here and it comes down here before going up. And like coming down here, that's kind of tickling my stop out zone under here. So that's like too close. So I want to get more into that. But at any rate, and I like this next part a lot. So it came up really well. And I exited up here. And it's like, oh, well, how did you know to exit there? Like there's no, it didn't touch the SMA, it didn't touch your 161. It didn't do any of that. What it was, it had a lot to do with this red candle, actually. When this green one shot up and this one opened up, you see there's a little wick up there. It immediately went green up there, but then came back down immediately. So I was like, what the hell was that? I was like, it looked like it was going to like smash from the momentum of this one and the previous, just go way the hell up with all this volume, by the way, with the R vol. But then it came down abruptly, and I was like, what the hell is that? That looked so promising. And it just kind of gave me the weird kind of like spidey sense. And I was like, shit, I hope it pushes up again. And it pushed up right to the same place and I got out. But the other thing that made me feel that way was down here in RSI. Like, yeah, sure, it was still above the 50, but I think the beginning of that cross was forming. I wish I could remember exactly what it was because it was primarily this candle. But I know I looked down here too, and like it really just didn't seem like a promising RSI look. It almost looked like it was going to like a head and shoulders RSI. Like look over here to the right. It's like Semper was saying with the smash through the 50. If it's just one of these little, like the groundhog, like sticking his nose up out of the hole and he goes back in. That's like what that is. It's not a smash through. So, and initially, I thought there was more promise for this trade because of this big volume beat. But when it got up here, when I saw the candle, got that little sense, and it shot up here, I was like, this is my second chance to make the best possible exit, I think, and it worked out. Um, so I was totally happy with that one. And again, that's me playing my system second higher low entry. Um, Keeping this in mind, and keeping RSI in mind, should I believe eliminate this? And those are my two new rules: second higher low entry, until I have the other one figured out, which I'm not in a rush to do, and RSI. And that's that trade. And that's all I did on Monday. So that's to
Yeah, that's a good trade where it lines up with the Bollinger Band, top Bollinger Band, and then that SMA, and then the 50 RSI.
yeah, yeah,
So just
absolutely.
keep an eye on that resistance.
Yeah.
As it lines up, you can at least lock up 75%, and then attach the profit stop or move up your stop loss above your entry.
Yeah. Yeah, absolutely.
And you made a great point when you first introed where you said that you're 60% red or 60% win rate. 60% is still good, right?
Yeah.
But you have to keep your losers small and your winners big so you can still be profitable
Yeah.
at 60% win rate if you're keeping your stop losses tight. or at least your or your loss is small.
Yeah.
Um, so yeah, you brought up a great point where even though you're 60, you can still be profitable.
Yeah, absolutely. And also, like one thing that's on my mind a lot is you also need to be profitable enough to justify the time and energy investment you make in trading, you know? Um, it's something I think about. I don't know if that's necessarily a helpful thought. So, but it's true. Like, I put a lot of time in this as we all do. And you want it to pay off. Um, but but that's another reason why the higher win rate is important to me. Like I want, all possible factors to, make me as successful as possible, of
As you
course.
fine tune your rules, you'll get more consistent. And your win rate will start to go up.
Yeah, absolutely. And these are going into the rule list, I'm printed up with the new ones. Um, all right, so that's Monday. Let's get Tuesday going here. Oh yeah, there's one more thing I want to say about Monday. Um, let's see. Actually, nah, it doesn't count. All right. That was just some price action that I saw. That wasn't a trade I took. That was nothing. I thought it was significant to share with the group, but actually, it's not. I just decided. All right, so this is a really funny trade. This is a green. This was an awesome trade plan. But it ended in like, I'll just go through it. You can maybe see why it's funny. Um, but so the trade plan and the setup were awesome. So this started with a higher low, little dump out, higher low here, kind of a double bottom. SPY hit major support. I forget what. I think I have a screenshot of that. And then it just blasted up. And I was like, holy shit, if this does like a good retrace, this could be a great trade, blah, blah, blah. So I drew the fib down from the red pullback, which yeah, those tend to work out the best. And I made a pretty hasty entry because I was like, shit, if this comes down to my buy zone, I just want in, no question. There's a huge green volume beat. And, RSI did the smash up. It didn't completely pull back to the 50, but the MACD cross looked good. Like it would have been a lot more pro to like give it some time to come back down here. Because this was the top of my ad zone. It could have easily come down here. And also it had the W going for it. Because you could have been like, so you could have been like, let me wait till it gets closer to the center W and more like the center of my ad zone. And fine, that would have been great. But this is where I took my entry. I figured it was all right. So chop, 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 that wasn't fun or whatever. But I knew that like this was my ad zone begins here. And then the stop would have been down here. And it's like, and I knew I had the center W to hold me up. And then it just completely surged up. And so my what do you call it? My target was going to be the 666 SMA, like awesome target, right? And when this candle shot up, it's my tendency, and I've said this here before, to take profits like a point or so before it hits the target. Makes sense because oftentimes it'll shy the target and a whole bunch of shit will happen. The funny thing was when it got up here, I was like, all right, time to take profits. And then another voice told me, yeah, but wouldn't it be a great recap if you actually like let it hit the 666 to a T? I was like, yeah, that would be kind of great to go tell the group on Friday that I held to the all the way to my target. And so that was kind of funny. And I have been encountering that a little bit, like, doing this finding your way course this for a few months here, is that like I want to like perform well and kind of like show specific progress each week, even though like I know that that's not how it's necessarily go down. Like specific progress is important, but not to the tune of where like you get this awesome trade and then I think I was trying to show off. I think that's maybe the short answer. So I was like, fuck, like let's see if it picks back up. Um, and it came down here, and below this 23 line would have been my stop out. It would have been. And I swear to God, I would have stopped out here because by this point, I was like, you know what? I deserve to take this lesson. Like, don't try to show off, keep to your traditional style of taking off a point or so before target, whatever. But it didn't, it survived. I was like, oh shit, can't believe it survived. Like that looked like certain death. And so, and it created a higher low. So the two things that I noticed was that it held sort of my area of stop out and it created a higher low. So I was like, all right, let's hang in here. So then it starts chopping around my ad zone. So I was like, all right, this could be good progression. And by the way, I was watching indicators, but they're kind of coming and going, like, and I was getting a little frazzled. By this point, I'm in the trade for like a fucking while. Um, so I was like, all right, let me just hang in for a sec because I got the higher low, and this became a second higher low, you know. Still not fun because it's choppy as hell, and there's big candles, and then there's wiki candles and all this shit, and then it surged back up again, and I was like, would it be like smart of me to take off profits here? And I was kind of like, well, maybe we'll make it to the 666 now, you know what I mean? And I was getting kind of caught up in that again, kind of like when you're in a trade and you just kind of like it's you've been in a while and you lose perspective a little bit. So chop, 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 chop. And at this point, I was like sick of it. I was like, you know what? I don't even care about the 666 anymore. You know, that's not even my style. My style is to get out a bit early. So when it came up here, I was like, I'm probably not going to get another one of these. And frankly, I would just like to determine for myself when I'm leaving this trade. Like, I don't even care about the 666 anymore. To hell with it. So I got out right here. And I was really happy. Still really happy about it. This would have been like 2.5 points more than this, but this was still like really good, like plenty good. It was like, 5 points, 5 points plus. I think it was 5.75, if I remember correctly. And then look at what happens. Complete flush down, flush right back up. And look what it did. It hit the 666. But I did not feel bad about that because I got out here and avoided some more pain. And this is totally, I mean, I don't know. I'm not the authority, but this looks like complete manipulation garbage. It's like, hey, we're going to shake everybody out now. But I spared myself from that. I was like, the hell with it. Let's just leave it here. I like this right here. So when I hit that, there was no regret. Like, oh, I should have held. No regret whatsoever. So that was that whole trade. And again, along the way, there were a couple things that were encouraging, like a nice green volume beat here. But really, and like, a lot of holding above the 50. In fact, I think this did kind of keep me in, like, because it was holding above the 50 for so long. Of course, I also felt, Christ, like, what if it just breaks below at any point? But it was holding, holding, holding. Around here, I just wasn't sure about anything. But over here, I was feeling better about it, and boom, that was it. So and also so much better to make this your trade instead of spending an hour plus doing that. But hey, whatever, a win's a win, and that's that. And this was my only let's see, this is my only one from Tuesday.
Lesson learned, right?
Lesson learned, yeah, for sure, for sure.
Brown Eye Girl said that Monday and Tuesday volume was so low
Hmm.
going into data drop. And I think she brings up a good point, and I think that's why um why Brandon will say, "Oh, it's gonna be choppy for the next 2 days," because
Yeah,
the CPI or PPI coming out. So that's Brandon telling us to be adaptive to what price action might give us.
right.
So yeah.
Yeah, absolutely. And I have where is our relative volume indicator? Like, I mean, it's that we can kind of know that without, being told. Do we have one of those through 7 of 9? Like that kind of shows like the relative volume on the day or the week. I assume we do. I just might not have it.
It's the
Uh,
ultimate volume study. It
yeah,
should have the R wall into it.
right. So it has the RVOL like of the day compared to previous days.
That comes with the ultimate volume study.
All right, all right. I'll flip that on. I know I don't have all my features turned on. Oh, there goes 7 of 9. Hmm.
Mm.
I'll switch that one on. Um, all right, and what's this? Oh, that's that. So moving right along. So that was Tuesday, and just one green, one trade for Tuesday, the green, and then do Wednesday. I have one green as well to share. So there's this one. Oh, this one was great. This one was awesome. I have no problem with this one whatsoever. So had some notes written about it. All right. So this one was awesome. This one was pretty much in step with with my system. I'm happy about this example. So there was a big dump, just like I want, and then some first set of higher low here, first higher low here. I drew my fib from the first red pullback. It had interaction with the 9 SMA. Fine, that sounds good. So first red pullback, fib, first higher low, second higher low right in my ad zone. Awesome. RSI went from overcooled to like a nice higher low in overcooled, and it came up, and I got it on this next higher low, which was awesome. MACD went for the cross. This one's pretty textbook. I'll explain my exit in just a second because I could have easily held for fib targets, but I got out here um because of what SPY was doing with resistance. And looking back, I can see why um I could have held on. Um and also because this was such like a manipulation down and back up move also. But so I got in here and that was my exit here. I highlighted this to show you what the RSI was doing at the time. Let me full screen this. So here's this area, and here's the RSI area of there. So you see it tapped its head on the 50 and even made its first lower high under the 50. But what was encouraging was that it bounced the moving average. It didn't even touch it. I don't know if that's significant, but it came very close to it and bounced up. And then when this one came down, it bounced up again. So it looked to me like it was respecting the moving average. Um, and then when it dipped down here back in price action, it just dipped down to the 78 fib. You know, it didn't even make it down in the 60. Oh, and also going back to the right here, not only was the RSI look a little bit ambiguous, but I figured it was I I like the respect of the moving average combined with the price action and combined with that the MACD appeared to keep spreading. It goes in a tiny little bit here, but it still would have had so far to go unless it did one of those really abrupt flaps. So I thought that all of that coming together was good. Plus, how could I forget huge volume back here? So all that huge volume combined with the fact that TTM was going to fire in the middle of like a higher low set, I thought was also really good. All right, cool. So let me tell you about why I exited the trade when I did instead of holding to my fib levels. So it's right here. This is going to be a pretty messy chart, but you'll be able to see. So on SPY, this is the 666, the yellow. And then this is the daily 10 SMA right here. So this is where that little battle was taking place. And I was like, oh man, is it going to like get crushed under the 666 and the 10? Because that's a whole lot of, as we know, resistance. But then it did this flap down, flap up. Now I got out here on MES on like this second candle, this candle or that candle. Shit, which one was it? The first one. Yeah. So I got out on this one. I figured, okay, I got my push back up. I'll just get out here. Fine. Well, you know, good enough or whatever, but it could have been better. Um, so here's why. So when it pushed up, I could have waited to see if it held the 666, which it absolutely did. Absolutely did. And also looking back on it, here was the first attempt to break out of the 10 SMA daily. Boom, little thing here, whatever. I could have waited for a second attempt and even a third, uh, because we've been talking about recently how price action will often test resistance 3 or maybe 4 times. I didn't even wait for the second test. This was the first, this was the second. I got out here before the second. You could have gone first, second, see what happens, and then this was the third breakout. And what you call it? And when it broke out, it got the 161 immediately, and 2 more candles, 200. I'm talking fibs now, 200 fib. And so again, this was my exit, perfectly good, whatever. Um, but it's those attempts to break out of a level, which I could have been watching more, especially with all this encouraging volume. and that it had made it into the realm of the RSI upper channel. I mean, that's all good stuff, you know. I still though am totally fine with this trade. I think it was good. And that's that.
Yeah, you should be happy with that trade. Um, Great get out. I mean, you got out at a great spot.
Mm-hmm.
Something that you may want to practice is maybe multiple contracts. So you would have
Yeah.
locked in 75 or 80% or whatever, most of your most of your position there at
Yeah.
your at where you exited, and then just let the rest ride.
Yeah.
But like I said, that depends on your account and if you're doing multiple contracts.
Right.
But as you see resistance, remember, lock it in, because you never know. Who's
Yeah.
not
You
to
can lock
say
it
that?
in. Oh,
Who's
go ahead.
not to, who's not to say that this red candle was gonna keep going down over here? You know.
Sure. Yeah.
So
So lock in 75 and maybe wait for those additional tests with
yep,
the other 25%.
yep. Because I mean, you're not gonna catch as big as move as you could have, but at least you locked in, and you remember you're trying to create consistency. You're not trying to hit home runs. The
Right.
home runs will come. Don't worry about hitting home runs.
Yeah.
Those will come once you get more practice. What you want to create now is good habits and consistency. The way to create consistency is lock in 75%, lock in 50%, lock in whatever, whatever, lock in your whole position.
Yeah. Yeah.
If you're messing with one contract, so when you hit your target, okay, I kept going. Okay, next time maybe I'll let it go a little bit more. But
Yeah. Absolutely. And I mean, using this setup the way I've resolved to keep using it, which is the second high or low. Um, the win rate is really good with that. And again, I didn't make that decision this during the week. I came to that conclusion today, just evaluating my week before the meeting. The other thing actually that which made me really take notice of RSI in this highlighted section, is because it hit its head on the 50 going up right when it came into contact with this 666 SMA. And at the time I was like, man, like hitting your head on the 50 while hitting your head on an SMA is like a pretty important thing to pay attention to.
yep,
But at the same time, it was volume, it was TTM. In the RSI, it was respecting the moving average and also that MACD spread. But I wanted to point that out just to sort of show where my psychology was, why I had a little bit of like hesitation, and why I started like looking at things like really closely, like really, really closely, which you should
yeah,
do it.
yeah, definitely. Like I'm drawing here on the MACD, like another signal, like you said, you pointed it out where it smacked down right here off the 50.
Yeah,
But MACD didn't even smack down any. Like
right.
you should have at least seen a little small pullback,
Yeah,
and it didn't. So that's kind of confirming strength right there. Like, okay,
yeah.
still got strength. But
Mm, absolutely. Uh, so yeah, I was totally happy with that one. And like, dude, let me just get rid of the spy. And I just want to show like my ideal setup that I showed you before. So that sort of like the one that I'm shooting for. And that's not even the best example. This is very, very close. You know, this might even be a better example. I have plenty of trades I take that are a better example than that one that I show in the beginning of the meeting, but it's just convenient. Maybe I'll grab a different one for the example in the future. All right, whatever. All right, so Thursday. So I took a fairly what do you call it? Embarrassing red on Thursday, which I will now show you. Is it this? Oh man, I really don't like this trade. Ugh. Let me get that off the screen so I can mentally prepare. All right, I'm ready. And also before I go into this, I just want to show you what I was attempting to do. So this was a misguided attempt to do the MA setup, the moving average setup, where it leaves your fib zone. You know, you start out wanting to do a fib play, and then it leaves the fib zone, maybe hits its head on the 100, comes down to the 50, and then you enter, which is exactly what I wanted to do. Or no, that's exactly like what it should be. But this was completely misguided. All right, so this was like, and by the way, this was also me not trading my demo account, I rather my sim, as the way I would trade a live account. I was kind of like, oh, it could work, but that's not the attitude. Because number one, that still counts as a loss. You just got to check your attitude. And number two, that's bad habits. And number three, this is the real thing. This is me preparing myself for real money trading. So to me, it's exactly the same. Like the preparation and the doing it, it's all the same continuum. So that was the wrong idea going into it. Like that was definitely the wrong mindset, like trying to be casual or like, let me just see if it works. Like, nah, because this clearly wasn't the setup. Okay, now I'll get into that part. Why wasn't this the setup? This is why. So I did draw, a fib from up here to down here. And, there was a dump, but it turned into this chop. Here's what happened though. There was no first high or low. And there was no high or low, and there was no push up past my fib range after creating a high or low. So in order for this to have been my setup, it would have had to like start here, maybe come up here, make a high or low here, and then push up there and then come back. But no, 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 no. This was just a squeeze up, for a fucking another thing back down. But I got kind of seduced into it by being like, oh man, I would like love to show, that I'm doing these moving average plays. I want to be able to like have one of those this week. I want to do it this week. And so I kind of got carried away in that mindset, which, I mentioned it before, it was similar to the one where I like wanted to show off or have something to show the group or whatever. So I got in here and just immediately flushed out. And I was like, yeah, that's what I get for like not taking this seriously. The one good thing about this, you see, I got these snowflakes up here. That's to show the RSI. Now, this RSI going on the right here, this is the RSI, even though it was above the 50, three higher lows. I mean, sorry, three lower highs. After all these years, I'm still getting higher low and lower high confused. So lower high, boom. Second lower high after the high, two higher lows. And I have the snowflake up here to show you where the second higher low was. I could have read that right here, seen the second high. Fuck, I'm saying higher low instead of lower high. Let me just back up. All right, high, lower high, second lower high. So this snowflake here has the second lower high, and that's the signal. And then it crossed. I could have gotten out here, you know, or rather, shit, I got in there. Never mind. But looking at price action, I could have told from here that it was not going to work because there's a second high or low. I'd like to code these snowflakes into it so that they happen automatically. But that could have told me right here that this trade wasn't going to work. Besides the fact that price action wise, it wasn't the setup. So I was just in a wrong mind frame here. I was treating my sim account like not seriously. This is supposed to be like trading a live account. And I lost sight of that. And it was also me like wanting to get like a show off trade or like prove that I know the moving average setup or whatever. Um, because it's not supposed to look like that at all. There was no proper base, no higher low, all that. And I don't feel like shit about it. Like I know I'm kind of like it sounds like I do, but like I don't feel like shit about it. I just like I want to burn this into my head just to remember that this isn't the right mindset and this doesn't look like my setup at all. It's not it. And to remember the snowflakes because they do tell a tale. High, lower high, lower high. Don't even think about it. Like, and that is that. I guess a new rule is like, when you see this for me, like when you see this, like don't even think that there's a trade coming. Wait.
Yep.
Uh,
Yeah, that's the RSI divergence. Just burn that into your head is
yeah,
when you've seen the divergence. And I'm pretty sure that that RSI tool um it'll code it for you
yeah,
automatically. But
which is
yeah,
awesome.
ooh, and then you gotta ask yourself, okay, if I see lower highs, right? So this is the way you should be walking yourself through this trade. Is all right, you see lower high, lower high, and you're like, okay, so I should be expecting price action to at least come down to here.
Yeah.
and tag because it busted through the 50, right? But it never tagged it for confirmation to continue going up.
Yeah. So how do you wait for the proper tag? Do you like wait to see how this candle ends, or do you like wait to see it pointing up a little bit while it's forming and then get in?
Well, see, like this, when it's pointing straight down like that, you see the candle, it's coordinating, so you don't know if it's gonna continue go back down.
I see what you mean, like the verticalness of it,
Yeah,
right?
if it would have been like, if it would have been like this, oh, what happened to my pencil? Huh, hold on one sec. So if it would have been like this, but that one busted through.
Yeah,
Right there, you don't know if it's gonna hit here and then continue going down,
right.
or if it's gonna bust back through and then. But you want to see the speed of it. If it
Yeah,
smashes through, then you don't even get in because you're
right.
seeing that.
And can you show me that other blue drawing before, like where you did that squiggle over here? And explain that again?
Yeah. So what you would wanted to see is this come down slower,
Yeah,
kind of hit right here, maybe hold, hit again, and then go up.
yeah,
Instead, you've seen it go straight down.
right.
So if you entered there, that you're telling already like you should get out
Yeah, yeah,
because
true.
you probably hit the bottom and you hit the bottom down here, which is your right stop, right?
Yeah,
Because you entered here,
yeah,
or the only thing that would have saved you here, the only thing that would have saved you here would be entering at the 38,
right. For sure.
because then your stop would have been break of low or break of the zero.
Yeah, yeah, exactly.
Those are the only two ways to correct that trade. But like I said, just keep an eye on the RSI.
Yeah,
The RSI is telling you what's happening,
for sure.
even though price action is telling you otherwise. You gotta
Yeah,
get in that mindset. Okay, is RSI aligned with price action or is it diverging?
right.
If it's diverging, then you know something's coming.
Yeah. Yeah, I mean, it's a really intelligent indicator, so it's like I'm glad I'm becoming more fluent in it. Like I'm really happy to have discovered this pattern and like, so
Yeah, you're learning on sim, which is great. You want to
yeah.
learn on sim. You want to perfect all your rules. So like that, in a month or two, when we go to jump on actual live trading and we have the small account,
Yeah.
your shit's already laser.
Yeah, for
You know what
sure.
I'm saying?
Yeah.
Take these licks, take them and learn from them. But when we come to live trading, you know the pressure's on because that's your real money. It's not paper money.
Absolutely.
Nothing's gonna simulate real emotions,
Yeah.
but perfecting and creating that consistent trading style will negate that. You know, you won't have to trip off that.
Yeah. I once saw a video on I don't know, I forget whose video it was on YouTube where they were like, the reason you're not confident is because you don't have a setup.
Yeah,
Yeah. And so like they explain that as like a big reason for like,
yeah.
bad trading psychology. And you don't have a setup until you go through a process like this. You just don't, you know.
Um, Another thing is you got to see where the buyers are. I don't know if you can tell where the buyers and the sellers are
I have a difficult time with
with
that.
price action. The easiest way that I've learned is wait for a little consolidation zone like right here
Yeah,
and a big move.
right.
So
Yeah.
there's buyers right here, right? But let's act as if none of this is here. See if we can hide it. So off of this one, you could tell you want to see where there's a like a little consolidation zone, 2 or 3 bars, and then a big move, like
Hmm.
right here,
Yeah,
or even like right here. Here's where all the sellers are.
right.
Here's where all the sellers are because why? Because there's a big move right after that. So
Yeah.
the sellers won this consolidation zone. So then you draw a zone or a line, and that's going to be your resistance. Over here, there's chop, right? There's chop. You're like, where the heck are the buyers at? And then you see a big move. Okay, the buyers are here in this little zone right here.
Yeah.
They're in this little zone. So you draw a line
Right.
and look at what happens. Support where the buyers. This confirms where the buyers at. The second move
Hmm.
confirms where the buyers are.
Right.
So here you're guessing, okay, buyers are right here. Right here, it's confirming. So like that, when it loses this, you know if it loses this level, it's over.
Yeah. Yeah. Is there a way like at this point, like let's say you're at the point where this move is forming, is there a way, what way would you like discern that? So okay, like this is where the buyers are, but when it pops up like that, you could also maybe think, well, this might be a pop to drop and like maybe go further down. Um, or is that not, does that not figure into like, what you're saying?
It would, but the Bollinger Band would tell you too. And then you
Right.
have this heavy support right here.
True. Yeah.
So you have that stacked up. So you have the Bollinger Band holding whatever this dotted line is, right? If you
Yeah.
would have seen the if you would have seen like right here this Bollinger Band going down right here,
Hmm.
then for sure you probably would have seen okay, it might continue going down.
Yeah, for sure. Yeah, because that's the 9 daily there, moving average. So that's always a good one.
So let's say I see this leg up, right? I see that leg up. Boom, okay. I draw the fib. Boom, boom. Oh, it broke below the 50 like it did right here, right? Because you
Yeah.
draw it right here. Boom. It broke below the 50. Okay. Where are the buyers? You should have had a line drawn. Like I would have drawn the wick, like a
Hmm.
shadow.
Yeah.
And then usually the way price action works is there's a first leg and then it comes back, tests it, and then it makes a bigger leg.
Yeah.
Um, so once you've seen this, then you're like, all right, that's confirmed. That's where the buyers are. So I would extend that zone over
Hmm.
and then just wait. Look, it lines up with your Bollinger Band. You probably
Yeah.
could have put a fishing order out there, and if you seen that price action wasn't going to hit there, but it was going to hit your zone, or you can start a position right here
Right.
and shoot that for optimal entry.
Hmm.
And then worst case, you buy the bid up here a little bit higher,
Yeah. Yeah.
for
Absolutely.
full position. And then that goes the same. Look at wherever there's a seller, there's a big move. So you would draw a line or a box. You would draw it out this way, and like
Hmm.
the little, and that could be your target. Okay,
Yeah.
the sellers are there. There's a pullback. Okay, that's a first test. Um,
And what's the best way to identify the box, like the little rectangular zone?
I usually do it from like this, right? So I start with the wick. So I do the wick, just the wick,
Hmm.
and then I just try to get the most contacts as possible.
Yeah.
It doesn't have to be perfect. I mean, you for all you could draw a line like off these two wicks right here.
Yeah.
Cause that look at if you draw one off of this doji right here. See this doji right here?
Yeah.
That's telling you right there the buyers are right here at the bottom. So you see a doji like that, okay, buyers are right here. So you could draw a line, kind of crooked line, but
Right.
just draw a line. If you draw this line, it'll contact those three right here. See, one, two, three. It'll do
Mhm.
one, two, three with big bottom wicks. Buyers are right there. And look at every time
Yeah.
hit right there. Buyers bought it up. What's the resistance? A moving average. What's the next resistance? Once it tags that, it's the next moving average, right?
Right.
So it comes back, hits the next moving average. Boom. Okay, what's the next resistance? Comes back, hits the next moving average way up here. It's stair stepping, even though it looks flat.
Yeah.
It's stair stepping because oops, um, because it's hitting it hit this moving average and then it hit that moving average and then it hit this moving average and then that one.
Yeah.
Even though it was flat right here, because
Yeah.
that's where the buyers were. So hopefully that helps explain how to find buyers and sellers and price action. And that
Yeah.
goes for zones and like buyer zones and some zones. Of course, the bigger the move, like the steeper, or like say this was only 2 bars
Yeah.
instead of 4 bars. That right there is a lot of buyers.
Yeah.
That's a strong buyer. Definitely for sure keep track of that.
Yeah, for sure. Yeah. Yeah, that all makes sense. Yeah, yeah,
And
because the buyers and sellers thing has always not been a part of what I think about. And this is illuminating because I was, I mean, in a sense, it's obvious because it's like, yeah, we're like, where the big move happens or whatever, but also like how to draw a zone. That's what was like
yeah,
unfamiliar with me is like the drawing of the zone.
and you don't have to go that far back. Of course, on a longer time frame, then you go more back, right? Because
Right.
like let's say price action's coming down to the daily, right? Because we can see it on our chart because of 709's code. You can
Yeah.
see price action coming down to like let's just say the 666 uh daily moving average. Get ready because there's gonna be a bounce off of there or a rejection.
Right.
You know what I'm saying? Off those significant levels,
Yeah.
there's big bounces. And if you zoom out of the chart and you see it bounce off that level within like the last 2 days or something, then you know that level is strong.
Yeah. All right. All right. Sounds good.
Cool.
So,
Hopefully that helps you along your way and
yeah, for sure.
identifying moving averages and how to identify the buyers and sellers.
Yeah, absolutely. Yeah, I'll definitely add that to the awareness. Let's see. Cool. See what we got. And I've got a green trade from that day as well. Yeah, yeah. Thanks a million for the insight. That stuff is cool. All right, so here's oh yeah, that's the wrong day. We already did that. Um, what day was that? Thursday. Uh, completely forgot where we were. So Wednesday,
We're on
Thursday.
Thursday.
Was this it? Oh yeah, all right. Thursday, yeah, that's the one. All right, so I got a green trade from them as well. And sorry, I just gotta do one quick thing. I'll be with you in a sec. All right. Sorry about that. The outside world was calling me. I'm gonna take care of something really quick. So yeah, so this right here. Wait, that one's not as good. Um, all right. It's actually not the screenshot one. Yeah, this is the one I wanted. Same trade, but slightly different shot. All right, so on this one was a first pullback entry, which I'm gonna like not be into doing anymore because they're less consistent. Oh, and the thing I realized about the first pullback entries for me is that since I don't have since it's not a two pullback entry, like I for some I find more like room to take really subjective ideas as reasons to like justify it. Like this one happened to work out, but for example, the first one that I showed from Monday, um, when let me just give you that back as an example. Da, 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 da. Yeah, so on this one from Monday, it's like since I didn't do the second pullback, since I tried to do first pullback entry, it led to me trying to justify doing it. And what I mean by that is it led to me using catalysts that aren't part of my system. Like this catalyst I imagined was a higher low on top of the 666 SMA instead of waiting for a second higher low. Anyway, that's what I mean. I only mention that because like this is a first pullback entry that did work, but it's not my style anymore. But hey, I'm glad it worked. So yeah, so I drew a fib from this first red pullback down here, down to there. RSI was recovering over cool, it looked good. And MACD was closing in, which is awesome. Also, volume looked good. And yeah, it was good. So I did my entry right here at the 61. And here's my 161 fib. And I took my profits kind of like right above that, right in this area here. So that was cool. It was a nice scalp and I liked it. What I really like about this trade is not the win necessarily. The win's fine, whatever. I like it, but I'm not going to do first pullback anymore. What I like is that it showed that RSI signal again. I was already out of the trade. I got out of the trade here, but I was watching RSI, and it did the lower highs, lower high, lower high. Um, this lower high, yeah, look at that. This lower high was this green candle. So if you were still in, you could have gotten out at this green candle right before the dump because that second lower high was right there. And I've noticed just from this week, don't put this in the bank, but I've noticed from this week that the second lower high signals that the dump candle is just about to come. It's just something I noticed this week. I'm going to keep watching it. The jury's still out, but I've seen a couple, two, three examples this week that happens. So that's also cementing that rule for me is to keep an eye out for this signal, either like, for one thing, to stay away from price action if you see that, wait for it to develop into something that looks good. But yeah, but also for leaving a trade. So if I had stayed in this, seeing the second lower high lined up with this green, could have gotten out and avoid this mess. That wasn't my trade though. I got out here, so all good. But here's another example of that RSI look. Yeah, so that's that trade. Boop. And that was from yesterday. Pretty good. So I'm saying goodbye to this for now, though. No more first pullback entries.
But you see
Oh, let me get
how that one kind of goes with the example that I had given you. You wanted it to bust above the 50, hold
Yeah,
it,
yeah,
bust above the 50, hold it, and then go up to the overheat.
true.
And on your first example, it didn't bust above the 68. It got held right here. And boom.
Yeah,
So just keep that in your pocket, just
yeah,
in case. Hey, you want to see RSI above the 50 if I'm gonna get in on the first red pullback.
yeah. By the 15. And it has to be a smash through.
Mm-hmm.
Yeah. Oh. So last trade of the week is from today. And it was a red, but I got out using the RSI example, which I'm excited about. It's not as exciting as a green, but you get it. All right, and here we go. So again, this was attempting to do this without waiting for a second high or low. Although it would have come in handy because this would have been a legit entry for playing the second high or low setup. But that's beside the point. So actually, it's not beside the point. It's part of the point. So I drew a fib from this tippy top, and I decided to enter over here. There was a after this candle kind of held the 61, and I saw this one go down and come up. I thought would hold the 61. I thought that that was going to be the first pullback. Turned out this was the first pullback. I thought it was going to be this one. Um, Turned out it wasn't. So went down, but I had RSI over cool, and I just thought it looked good. Um, well, I don't know. There was some support on SPY and everything. So it did that, came down. I was like, all right, I was already like shit. That's why you wait for the second pullback. And what do you call it? And so this right here was actually the second pullback. And I just went so so yeah, I was up here and it was chopping around and stuff. And at this point, I was kind of like, this trade probably isn't going to work because it was testing up here a lot. It kind of tested it in clusters. Like here's kind of the first test, dip, second test, dip, third test, and then this stuff. But I remembered that RSI lower high look. So coming down into RSI, here is the high, here is the lower high under what do you call it? The 50. Here's the second lower high under the 50. That second lower high lines up with that little guy, which is that little doji. And I was like, oh shit, this is that same thing I've been seeing all week. So when I see that, the next candle's probably going to be the dump. And it was. I waited for the candle to open. I'm not going to say I didn't. I did. Next time, maybe I won't. But when it opened, I was like, oh shit, time to stop myself out. So I stopped out here, went down a lot further, and then all this mess. But this was my signal. Second lower high, and the next candle flop. So my entry was up here, stopped out here, or stopped there, got out. Really, really small loss, 75 cents, something like that. Uh, you know, Maybe it was a whole point. I'm not sure. Let's call it a point. Yeah, just 1 point. And this paid off. And which is awesome to see because it did make a second higher low, which kind of got nullified by this to a certain extent, but by here you knew. And why? Because of RSI. That is the new look. And so that was all my trading this week. I think next week you'll see my trades reflect what I've learned this week because it was a big learning week. And I still like the 60% win rate, which is awesome. But yeah, that's that trade. And anybody have any comments or input?
Awesome stop loss.
Oh, thanks. Yeah.
And that's that goes to the point of keeping your stops uh tight,
Yeah.
especially when you see something like that and you already indicated next time you're gonna you already know, because you
Yeah.
don't want to wait until it opens, especially if you already suspect. You know what I'm saying? Because if it opens, yeah, it can go the other way, but it can also smoke you.
Yeah.
The way that I like to do it is I'll draw a line on that doji, on this doji,
Hmm.
and if price action is above it, I'll
Yeah.
hold. I'll hold,
Right.
right? Because if it opens up above it, yeah, it can come back down and smoke me down.
Sure.
But that's the way that I use it is I'll use that doji as the
Yeah.
over under level.
Right.
And look at it's under it. Okay, I would have closed. Bam.
Yeah. Absolutely. Yeah. I'll keep an eye there. And like,
Especially because look at it lines up with this doji over here.
yeah, for sure. The one to the left of it here.
So that level right there is strong.
Yeah.
And it's under it. So yeah, use a good stop loss.
Yeah, absolutely. And the and if I hadn't had this signal, I would be like, yeah, let me just do my usual stop. A candle closed before under the 23. Well, guess what? That was that same candle.
Mm-hmm.
Instant stop out. And then that would have been not good. But yeah, so I like this trade because it shows in action one of the lessons and new tools I learned this week.